The eternal question in investing: should you put your money into real estate or the stock market? In 2025, with interest rates still high, inflation moderating, and global markets in flux, this debate is more relevant than ever. In this video, we'll break down the historical returns, the risks, and the unique advantages of each, and help you decide which path might be best for your wealth-building journey. Section 1. Average returns. Historical data. Let's start with the numbers. Over the last 100 years, the U.S. stock market, measured by the S&P 500, has delivered an average annual return of about 10% before inflation. Real estate, particularly residential housing, has historically grown at around 4 to 5% per year in appreciation. But when you add rental income, total returns can often match or exceed stocks in certain markets. The takeaway? Stocks tend to outperform in raw appreciation, but real estate provides a unique mix of steady income and tax benefits. Section 2. Risk, liquidity, leverage differences. Now, let's compare the mechanics. Risk. Stocks are more volatile. A portfolio can swing 20% in a year, while real estate moves slower, but can be hit by localized crashes. Liquidity. Stocks win here. You can buy or sell instantly. Real estate takes weeks or months to transact. Leverage. This is where real estate shines. With a mortgage, you can control a $300,000 property with $60,000 down, amplifying returns when prices rise. Stocks usually don't offer this type of safe leverage to retail investors, so each has its pros and cons depending on your financial strategy. Section 3. 2025 conditions, interest rates, and economy. Now, how does the current 2025 landscape change things? Interest rates. Mortgage rates are still hovering around 6 to 7%, which makes buying property more expensive. This cools real estate demand, especially in overheated markets. Stock market. After the AI boom of 2023-24, equities have cooled a bit, but tech leaders like Nvidia, Microsoft, and Meta are still driving strong gains. Meanwhile, dividend stocks are providing stability. Economy. With moderate inflation and slowing GDP growth, investors are split. Some favor the safety of real estate cash flow, while others chase equity growth in innovative sectors. In short, both markets are shaped heavily by today's rate environment. Section 4. Who should choose real estate versus stocks? So which should you choose? Real estate is better for investors who want tangible assets, cash flow from tenants, and the ability to use leverage. It's also great for long-term planners who don't mind lower liquidity. Stocks are better for investors seeking flexibility, diversification, and passive investing opportunities through ETFs or index funds. Stocks are also easier to start with small amounts. But here's the truth: you don't have to choose just one. Many of the wealthiest investors combine both, using real estate for stability and income, and stocks for growth and compounding. So which builds more wealth in 2025, real estate or stocks? The answer depends on your goals, your time horizon, and your risk tolerance. Real estate offers leverage, income, and stability. Stocks offer liquidity, diversification, and long-term growth. The real power comes when you diversify across both. What about you? Are you team real estate, team stocks, or team both? Drop your thoughts in the comments. And if you found this breakdown useful, make sure to like this video, subscribe for more investing insights, and hit that bell so you don't miss the next one.